Buyers are canceling contracts. That's what's happening right now. Nearly 40,000 home purchase agreements were canceled in December, representing 16.2% of homes under contract, the highest December cancellation rate since records began in 2017. Despite this, existing home sales rose 0.7% month over month to 4.3 million units sold, the highest level since February 2023. So if you are renting and thinking about buying, should you wait or should you buy? Or if you're a home seller wanting to sell and move up or move down, should you stay put or should you sell and buy? Let's take a look at it. History is reporting, according to Redfin, a record number of home buyers backed out of deals in July 2024 despite falling mortgage rates, according to a new report. About 59,000 home purchase agreements were canceled in July, real estate brokerage Redfin said on Monday, representing about 16% of the homes that went under contract in July. In December, the rate was 16.2%, the highest on record. Now, this video is not to scare you. If you're thinking about buying, go right ahead. If you are ready, willing, and able to buy, this is a great time to buy. The best time to buy any house is when you are ready, willing, and able to buy. But if you have thoughts or if you have doubts or if you want to know what's happening out there so you are well educated, you are well prepared to buy a house when you are ready, here are some of the reasons why these buyers, 40,000 of them, canceled in December. And of course, every month there's cancellations. And back in July 2024, there were 60,000 cancellations. So here are some reasons why buyers are backing out, and also home sellers who are selling their home and wanting to buy another house, whether it's a bigger house, smaller house, single-story home, they're backing out as well. One of the biggest reasons is because the mortgage rate spiked. When you open an escrow, you thought you were going to get 7%, but after the lender talks to you, checks your FICO score, checks your debt-to-income ratio, etc., your mortgage may go up, and that may increase your payments by $200, $300, $500 a month, and then sellers or the buyers may be backing out. Buyers get cold feet for whatever reasons, but the biggest reason they get cold feet is because, one, they know they're paying a higher price these days, and they know they're going in at, let's say, 7% and hoping and crossing their fingers that they will get 7% or a better mortgage rate. Then they find out that they have to pay a higher mortgage rate or come up with more down payment or more closing costs. Also, keep in mind that the median home price in USA is around $420,000 today. That's pretty expensive. Of course, in California, where the median home prices are very high, like New York and Miami, it's not a big price. But if you look at the average, that's a lot of price to pay. And we'll talk about the payments as we go along. In fact, let's look at the principal, interest, tax, and insurance payments on a $420,000 house. I'm just taking 420 because it's an easier number to work with. Assuming you put 10% down, you purchase a house $420,000 down, and your mortgage is 7% interest rate, APR, or 7%. Your principal, interest, tax, and insurance comes out at $31.36 per month. And of course, the tax rate I'm using is 1.14%, that kind of Orange County, California rate. But in some other states, that may be 2%, 3%. So your payment may jack up to $4,000 or $5,000 a month. That's a lot of interest to pay when you count principal, interest, tax, and insurance. And as you know, insurance prices have skyrocketed. You might have thought that you will get, let's say, $3,000 a year on insurance, and then you find out, especially if you're in the fire hazard area like I'm in Orange County, or if you're in Florida where there's disaster areas, or you're in Nebraska, or you're in Louisiana or Texas, your insurance will skyrocket. So you thought you would get $1,000, $2,000, $3,000 per year in insurance, and then when you come close to closing your escrow, you find out, wait a minute, my insurance is what? It's $5,000, $6,000, $7,000. That's way more than I can afford. So then the buyers have to back out. And that's one of the reasons that buyers are backing out. The other reasons buyers may be backing out is if you buy in a newer home or in a community or a townhouse complex and there are association fees, like say in Florida, what's happening right now is when you go close the escrow, you find out that the HOA is currently $300 a month, but then you read the reports and say, hey, look, in next month or next 3 months, the HOA is going to go to $600 a month, $700 a month, $800 a month. And believe me, guys and girls, this is happening right now. I have a client on relocation. He backed out of a deal because of his HOA but not only that, his HOA went up, but the current owner has to pay an assessment fee on the condominium complex of $50,000, and he is not being able to pay that. That's why he's selling. So because he's selling, the seller wants the buyer to pay some of those assessments. Now there's no way he's gonna pay that because the buyer has to pay the down payment, and now the seller wants to transfer some of that assessment fees to the buyers, so he canceled for that reasons. One of the other factors that affecting buyers from moving out is that while they're in escrow, whether it's a 30-day escrow or 45-day escrow and 60-day escrows, and when they're finding out all these expenses and all the hurdles they're going through and what will happen when they buy the house, they're getting cold feet because of the economic uncertainty. The employment is pretty good right now, but if you look at the history, in January 2005 or in 2009, the unemployment rate was 10%, which was pretty significant, but it went way down to 2019 during the pandemics. It went down to 4, in the index of 4, and right now it is up. Unemployment figure is up, is inching closer to 5 and 6%. So they have the jitters that what happens if I lose a job and I won't be able to make the payments, or if it's a double income family, if one of those family members loses a job and then gonna struggle to buy a house. As it is, most buyers, at least the ones that I worked with, most buyers struggle to buy a house with a down payment and barely making those payments. But when one of you loses a job, that makes it even tougher. But here's some other reasons why people back out. Because once you're in escrow and let's say you do an inspection and you find out that, hey, the AC may need to be working, or you may find out that the air conditioning is working but may need some repairs down the road, or if you have a pool, you find out that may need work down the road in 1 or 2 years. So after inspection and after evaluating the report, you find out that, hey, there's a lot of work coming up in the next 1 or 2 or 3 years, and that's another reason a lot of buyers have cold feet. The other reason that buyers are backing out is, as you know, the home prices are going up and up and up. Sellers, quote, are greedy. They want as much high price as possible. A lot of homes, even today, especially in Orange County, some of the metro areas, homes are selling at over list price. So what happens is when the appraisal comes in, let's say a house was sold at $420,000 and the appraisal comes in at $410,000. That means there's a $10,000 shortage, which the seller may ask the buyer to pay. And if that does not happen, buyer does not have the extra $10,000 to pay, then that escrow may cancel. So appraisal is a big issue these days because a lot of homes are selling over asking price. And one of the other main reasons homes are canceling is because of the consumer debts. As you know, and you probably have credit card debts, and credit card debts are rising by the day. If you look at the statistics, right now, the average credit card debt by a household is about $10,757. That's a big balance, and that's just an average. I know some clients of mine have $30,000, $40,000, $50,000 in credit card debt, and they cannot buy a house until they drop that debt. This $10,757 was a date as of 2024 in Q3. Drop a comment below. Let us know why you may be struggling or why you may have canceled a transaction. Let us know and please share with us. Let's look at some of the things you could do if you are in a situation where you're thinking about canceling or you're thinking of buying a house and it's out of your reach. One of the things you can do is, yes, the market is very strong, home prices are very high, interest rates are high, sellers want what they want. But even in this market, you could try to negotiate the price down. You could negotiate for the sellers to pay you for some closing cost. You could negotiate with the seller to help you buy down the rate. All these little things, if you save $100, $200, $300, or a month, that'll go a long way. Or if you have the seller pay your down payment, let's say you have to put $12,000 down and the sellers assist you in paying $5,000 down, which is approved and it is allowed by the lenders to do so. You may save $5,000, $10,000 out of your pocket expense, and you may end up saving $300, $400, $500 because you negotiated with your agent. The other key thing, if you're a buyer and if you're thinking about buying a house, is make sure that what the lender tells you in this example that I gave you, let's say the lender tells you that, hey, Mike, you're approved for $3,000 a month payment. You can buy a house up to $400,000 at 7%. But keep in mind that the lenders approve you based on only certain debts, like your auto payments, your other car payments, credit card payments, and other debts that you have. But they don't factor into other things. They factor principal, insurance, tax, and interest. But they don't factor that, hey, you have 2 cars, you have credit card bills, you have cable TV, and you're paying $50, $60, $70 a month. You have to go to work and you're always in a rush, so you buy coffee and donuts every day. That's $100 a month expense. You have kids, young kids, and you're buying diapers, and those are freaking expensive. So all those you have to factor in. So in this example, if your payment is $3,100 a month, then you factor all these expenses, you're already at $4,000 a month. Lenders don't look at that. So one key advice or one key recommendation, that even if you qualified for $3,000 a month, let's say up to $400,000 purchase price, one of the options is you could buy below your means. So maybe you want to buy a $350,000 house instead of a $400,000 house, so that your payments drop, so you're not stretched. Most home buyers today are stretched on payments, and you don't want to be in that situation. Now, if you are already a homeowner and you bought a house, let's say 1 year ago or 5 years ago, and you're struggling to make payments, one of the things you could do is talk to your lender, see if they can give you some terms that they can change or give you some leeway and what your options are. So do talk to a lender. Lenders want to get paid, and if you're in trouble making payments, they will work with you depending on your situation, especially if it's a financial situation or a medical situation, because sometimes people get behind. The other thing you could do, worst case scenario, if you bought it 2, 3, 4, 5 years ago, the good news is you have a lot of equity. Even if you bought 2 years ago, your home price has gone up anywhere from 5 to 10 to 20%, depending on where you are. So you have a lot of equity. Nice. So you could sell your home, pay the closing cost, and I can assure you, depending on when you buy and where you are, you will get most of your money back. You will not lose out on your money. At least you won't get behind. There's also statistics out there that the number of foreclosures in the last few months have gone up significantly, especially those pandemic forbearance terms that they were given. Those are no longer valid. So a lot of those homes are coming to foreclosure. A lot of the sellers are getting behind. Some of the sellers are losing jobs, so they cannot make payments. So if you are one of those sellers thinking that you may lose a job or cannot make payments, you could sell your house and then rent for a while and then come back in the market when you are ready to buy again and confident enough to buy a house again. There's no point struggling in this market. We need to make a living and move on. Drop a comment below what kind of challenges you may be facing. On the other hand, back in 2008, 2006, we did a lot of short sales, we did a lot of bank foreclosure sales, and we talked to lenders. So I have an experience talking to lenders and banks. So ask me the question, direct message me, and I'll personally call you or refer you to an agent of networks that I have that deal with foreclosures or short sales and distressed properties, and you can talk to them with no obligation. So fill out the link below and I'll be glad to assist you. Buyers should be financially cautious. Don't overextend yourself based on lender pre-approvals. Foreclosures are rising, meaning more opportunities for investors, but also financial challenges for homeowners. For those behind on payments, proactive communication with lenders is key to avoiding foreclosures. Homeownership is an American dream. We don't have to struggle if you're not ready. The best time to buy is when you are ready, willing, and able to buy. If you have to wait, so be it. This is a volatile market. Be cautious if you are buying or selling. Any questions? Direct message me.